Hey everyone, welcome back. So today is the second day of trading into the new year. We are experiencing some of that January effect, as I mentioned in a couple of videos ago. And it's just typically whenever, it comes around January, the stock market tends to pop up a little bit. People are, getting back into the market after a sell-off in December. And so the last 2 days, the market has been up. The NASDAQ is down a little bit, but for the most part, of my portfolio is doing pretty well. I'm pretty really happy about that. But just really thinking about what to invest in 2022. And today in this video, I want to talk about three stocks that I'm continuing to look at and even adding to my portfolio. And these are just stocks that I've been tracking and taking a look at. And I'm gonna be using an option strategy specifically called the put credit spread. Okay, so the put credit spread in layman terms, or just to simplify it, is just basically when you don't want to buy a share of the stock, okay, and you're betting that the stock will go up. Okay, so it's gonna cost probably a lot less money than if you were to buy out shares. Okay, so and then for you to make a profit, the stock sometimes just doesn't have to move down by too much. Okay, so you're gonna essentially collect money up front when you sell that spread, and if the stock goes up, then you basically keep your premium. If the stock goes down, then that's when you start to lose your premium. Okay, so I'm going to go ahead, without further ado, I'm going to take a look at these three stocks. The first stock ticker is SHOP. I'm sure many of you have heard of Shopify. Okay, so Shopify stock is down 5.36% today. In the last 6 months, it's actually been down 16.12%. And so, this stock has been trading kind of weird in the last couple of months, but right now it's pretty down from its high up in November, where it got up to 1690. And so I'm definitely bullish in 2022 about Shopify, and therefore I want to add Shopify into my portfolio, but at the same time I don't want to spend $1,300 per share of the company. So I'm going to be going to Finviz real quick, taking a quick look at some of the fundamentals on Shopify, just so we kind of know what we are getting ourselves into. So right now the P ratio is sitting at 50.82. Okay, so the RSI is something I'd like to take a look at. Right now it is oversold, so more people are selling than buying. If it's below 50, then that means it's oversold. Shopify is just a solid company that I know is going to do well in the long term, and that's why I'm going to be betting that the stock eventually will go up. I don't know exactly when, but let's take a quick look at one more chart that I typically like to take a look at, especially for put credit spreads, and that is the moving average Bollinger Bands. Okay, so right now Shopify, as you can see, is moving well below the moving average, and so that's why I think it's a perfect time to sell a put credit spread. Okay, so let me show you how that works on my Robinhood account. In fact, I've already gotten ready of what I'm going to sell. So first you would choose your expiration date. Typically, it all depends on, what you want to do. Typically, if you go further out, you'll get higher premiums, but you'll collect your premium a little later. Okay, so right now, if I were to open up a put credit spread in January, right, I can sell, and whenever you sell credit spreads, you want to go in the money, so below the current share price. And I'll show you why. Okay, so unless you're confident that it's gonna go up by a lot, which nobody really knows when it's gonna pop up, then I would go below the share price. Okay, right now if I open up a trade on Shopify with a put credit spread, I can open up one leg. So usually I would buy the put. Okay, so first, and I will sell the put right above that strike price. Okay, so now as you can see, okay, so if the stock of Shopify doesn't move below 0.3% by January 28th, I'm going to make $380 off of a max loss of $120. To me, that's actually a pretty sound bet, okay? So now there's not a lot of time for the stock Shopify to at least not move down too much. If it continues to go down, then yes, I'm going to lose money. But the max loss on that is not that high, right? I'm probably most likely going to make that money so long as Shopify doesn't continue to go down. But who really knows, right? No one really knows when or how Shopify is going to go up. So if your risk appetite is a little lower, then you can extend the expiration date out to maybe another month or perhaps even another 2 months. Okay, so right now, if I were to open up a trade on expiring February 18th, I can buy a put. Okay, so I'll buy a put probably at, now you can go even further down the chain, okay, and you would see that it's a even safer bet. Okay, so now Shopify has to move down by 0.62% for you to start losing money. And essentially, if it doesn't go down by more than 0.83%, you're gonna make a profit. Okay, now your max profit is only 215, and now you're risking a little more money. But it's generally a slightly safer bet because now you have more time for the stock to move up. Okay, so in this case, most likely I would probably do a trade that is a little further out just because I don't really know when Shopify is going to recover. I want to give it plenty of time. And yes, while the money is going to be tied up in collateral, keep in mind that you can really sell your credit spread anytime. Okay, so you don't have to necessarily wait till the expiration for you to collect your money. Okay, so if Shopify begins to move up, then the contract of the put credit spread I sold is going to be worth more, and therefore when I buy it back, okay, I'm going to make a profit. Okay, so most likely I would just go ahead and sell this one right here. Okay, so I would sell the credit spread at in expiring June. Well, let me just take a quick look. Let's see how the premiums are for July. Okay, let me take a look. Okay, July looks pretty good. Okay, so I may just do that then. Okay, so that looks like a pretty good trade. I'm gonna see if I can get filled. Okay, so let's see if I can get filled on this. Okay, so sometimes you may have to decrease your credit a little bit for you to get filled. Let me see if I can lower my premium. Okay, so now I'm risking $1,000 to, sorry, I'm risking $920 to gain $1,000. Okay, let me see here. Let me just do one thing real quick. Okay, I realize perhaps it's better if I move on, but I do like to do live trading. Oh, this is perfect. Okay, so now I'm basically betting $1,000 to gain $1,000, so long to betting that Shopify will not move down by over 6% before July 15th. Okay, so I actually like that trade. Yeah, I like that trade. Let's see if I can get filled. Okay, I promise guys after this trade, I'm gonna go ahead and move on. Okay, so, okay, it's okay. I will move on for sake of this video. I'll probably go ahead and try and fill that trade later on. Okay, so Shopify is the first stock ticker. The second stock ticker I want to take a look at is Tesla. Okay, so Tesla, as many of you probably are following by now, is up a whopping, I think 16% last month. So that's crazy for Tesla. Let's just take a quick look at Tesla. Tesla really, you don't really need to see the fundamentals because it's already pretty crazy enough. So I typically don't really take a look at this. But just, Tesla has so much, it literally just blew away people's expectations. If you take a look at Tesla Q4, it basically delivered almost 1 million EV vehicles in 2021. set a new record. So there's a lot of bullish people on Tesla. People are definitely bull Tesla, and so but right now, as you can see, right, if you're taking a look at Tesla, and I promise, after this also that there's going to be other stocks besides just the most popular ones. But Tesla is trading right now at $1,167. So if you're not able to buy Tesla, okay, at that price, or if you just don't, if you're trying to grow a small portfolio, what you can do is same thing. You can do a put credit spread, and you can try different expiration dates. Right now, if I opened up one in January, I would probably go, definitely further down the money, or sorry, further down below the share price, because I know there could be very well be a chance that Tesla would fall a little bit, just because it popped up so much in the last couple of days. So I would take a look at something below the current share price. And so right now, if I sold a put at 1,140, bought a put to cover that at 1,135. If so long as Tesla doesn't move another, below -2%, then I'm gonna make $240 on that trade. Okay, so but in this case, I would definitely take a look further out, because we just don't really know how Tesla is gonna move. But if you're bullish on Tesla long term, you can set an expiration date like September 16th, and I would probably consider something like 975, 1,000. So I would buy the put at 975, sell the put at 1,000. And now, as you can see, Tesla will have to fall by 15% in order for me to lose money, right? And that happens, that allows me, 9 months. So if Tesla by September 16th, 2022 doesn't fall by more than 15%, I get to keep that entire premium of $1,100. Okay, so that way you don't have to buy a whole bunch of shares, and so long as Tesla doesn't drop by a whole lot, then you're going to make pretty good money on that. Okay, so that's Tesla. Let's take a quick look at some other stocks real quick. I don't want to spend too much time on Tesla because I know typically I like talking about Tesla. Let's take a look at Pinterest. Okay, so Pinterest is a stock that everybody has been talking about. In the last year, it's just gone down a lot. Right, it's gone down 50%. A lot of people don't understand why, and like Pinterest is a company that I think is definitely going to be around for a long time. I don't really see Pinterest as going anywhere. And taking a look at Finviz right now, we can see that it's definitely oversold at 35. So that's well below 50. A lot more people are selling than buying. Again, I don't typically really understand why. So maybe let's take a look. And if you know why, or if you have a better idea of why Pinterest is down so much, let me know in the comments below. And if you would like also to share any other ideas on put credit spread stocks that you would sell credit spreads on, let me know in the comments below. We're giving away a free t-shirt on ideas that we really, really like. So make sure you don't miss out on that. Okay, so right now Pinterest is selling at a P ratio still relatively high at 67. It is considered a growth stock, so that's why. Well, let's take a quick look at, let's just take a look at their financials. So anytime a stock has been down so much, you typically want to take a look at what's going on with their financials. It looks like the revenue is actually pretty healthy. I don't know why. It's continuing to grow pretty steadily. Let's take a look at the profit a bit. They're making pretty good money. So it's not like, I really don't understand why Pinterest is down so much. Their total assets has continued to grow. Their cash flow, okay, so it's very, very healthy. Yeah, and it's down 8% today. So let's take a look at the Bollinger charts to see how it's moving compared to the moving average, and it's definitely down. So yeah, I don't understand exactly why, but right now I do think it's a great time to go ahead and get into Pinterest if you're bullish on Pinterest. Okay, so taking a look at the option chains, okay, if we're looking at trading options with Pinterest, okay, so we can buy a put. Let's set our expiration date first to, I want to give this also plenty of time, so let's do probably September 16th, and we're going to buy a put, we're going to sell a put right above that. Okay, so this is a small trade, but so long as the Pinterest doesn't fall another 6%, I'm going to be collecting $128. Okay, so another way you can do it, besides if you're tired of put credit spreads, is you can simply sell a put. So selling a put just means that, okay, you're telling you're basically willing to buy, okay, Pinterest at a discount and you get paid a premium. Okay, so let's say I'm willing to buy Pinterest 100 shares at $31. Okay, I would be collecting $93, and if it falls below to $31, I would get it signed and I would have to buy 31 shares of Pinterest. I think this is a great stock to sell puts on. Okay, so if you want to sell puts on Pinterest, I think that's a really, really good idea. Okay, so that is Pinterest. Okay, so Google is another company I always love talking about, and right now it is slightly above. It's moving up just a tad bit. But the reason why I'm so bullish on Google is there's so many reasons. I just made a video on Nancy Pelosi sales buying 10 call options for Google. But as you can see right now, Google is trading at a pretty higher price. I don't think I need to talk about the fundamentals of Google, but if you want to take a look on FinViz, you kind of see some of just get a bit better picture of what's going on. Google is trading it right at a RSI of 50, so that's pretty fair. I love their P/E ratio because it's very, very low for a stock like Google. And yeah, so I have no question that Google is going to do fairly well. I just don't really see it going anywhere, but right now it is trading at 2,000, almost $900. And so if you don't have $2,900, that's totally fine. You can also you can open up a put credit spread, as I've been saying. And if you wanted to copy Nancy Pelosi's expiration date, September 16th, you can do that. And I would probably just buy a put here and sell put there. So 2750 and 2800. So right now, if Google doesn't fall by 4% before September 16th, you're going to make $2,000. You're going to have to put up some collateral for that, but I think that's a really, really good trade. If you want to go even safer, you can buy a put at 2700 and sell a put right above that. Okay, so now Google would have to fall down about 5.7% for you to start to lose money. But again, you have till September 16th to for this trade to really play out and move up above the negative 5%. Okay, so I know that's a lot of information, but these are just a couple companies that I would definitely take a look at. Right after this video, I'm gonna go ahead and do my own trades. If you like this content, if you want me to make more videos like this, make sure you smash that like button for the YouTube algorithm. I would really appreciate that. Again, comment below if you have any questions or if you have any ideas on stocks that you would want me to sell credit spreads on. If we love your idea, we'll send you a free shirt. And subscribe if you haven't already. Until next time, guys, I will see you in the next video.